What's up, guys? What's going on? Let me just get everything set up so it looks nice and clean. Got the chat. Hold on. How's this sound? Give me a sound check real quick. First person that indicates that I have good sound will be rewarded with a thank you. And then we'll get it started. Today's stream is brought to you by Poppy, the prebiotic soda. No, that's a joke. But they sell this at my gym. It's for healthy gut. This is watermelon flavor. All right. Sound is great. Cool. So thank you for tuning in, guys. If you're new, introduce myself. My name is Ryan, also known as Cantering Clark on Twitter. You go to my Twitter, go to my profile. That is me right there. My partner and I, Josh Rager, we are the co-founders of BlockRoots. So we are primarily a market profile and order flow educational platform, but we do have a Discord. We do have a pretty robust community there. So if you want to check us out, go to www.blockroots.com. If you're not a subscriber to the YouTube, make sure that you go ahead and hit the subscribe button. Go ahead and like the video as well. We like all that good stuff. You know, all the generic things that we're supposed to say in the beginning of the stream. But yeah, it does count. All right. Just as a reminder, to get this out of the way, none of this is financial advice, right? None of this is financial advice. You're on your own. This is my opinion. If Josh does a stream, it's his opinion. You know, my opinion doesn't necessarily reflect his opinion. His opinion doesn't necessarily reflect my opinion. Our opinions should definitely not reflect your investment thesis. Again, this is for entertainment purposes only. Try to keep it as entertaining as possible. It's not too hard. I'm just a dude from New York. So yeah. So we'll get it started in a minute or two. Just give everyone time to enter in. I think we said everything. Oh, as a reminder, if you could see on the top left portion of the screen, somewhere up here, we are partners with Phemex. So Phemex is the exchange that you're currently looking at right now with sushi. So that should be on the bottom left-hand corner of the screen. Phemex Exchange, they currently offer spot contract and a yield generating savings, which is pretty awesome because I checked it today and they upped the limit. So I think you could deposit now $1.5 million in USDT. And you could earn 10% on that if you lock it up over the period of, 10% APY over the period of 7 days, which is pretty fucking awesome. All right. But again, use any exchange that you feel that you like to use the most, the one that best suits you. So if you want to go ahead and check out Phemex, the link is Phemex.trade, and that does give you access to whatever kind of promotional feature that they're running under that link. All right. So on behalf of my partner, on behalf of our partners, thank you guys for tuning in. I think I'm constantly going to be the person that tries to riff all of that shit in the beginning of the stream. It's a lot of people that are YouTubers and they're really comfortable and you can tell they're really good at YouTubing, and I'm definitely not. I fuck up the sound, I fuck up the video. I try to do a really good job at conveying clear, concise, and comprehensive trading information, but I'm not a YouTuber, even though I'm trying. So, I don't have a script. So there'll be times when 10 minutes in, I'll be like, fuck, I forgot to say this isn't financial advice. But no matter what, remember that. Okay, so let's go through the chat, see who's in here. Got a few people. Make sure you hit the like button. Let me go ahead and share this really quickly. All right, live now. Now, hop in. Live now, hop in. Okay. Cool. So yeah, we're just gonna kind of go over some charts, talk about BTC. We can talk about AMC real quick. The meme stocks, right? The meme stocks absolutely going nuts. I was in a theater the other day, and it was absolutely a ghost town. All right, so we'll just go to I was adding a new Phemex watch list. So go to all exchanges. Just take a look at AMC. I mean, it was up over from the beginning of June. We're talking about fuck it, from last week. Up, whew, Jesus, up 461%. Yesterday it was up 100%, right? So 100% yesterday, absolutely ridiculous. It's the meme stocks, guys. This is a completely different investing environment, and you know who said it really well? Morgan Housel. All right. So I shared this on Twitter. Actually, it's on my page. Two things can be true about this market. It's crazy. It is. All right. Market is constantly evolving. Market is constantly changing, and the times are changing. So that should be obvious. So it's crazy, and social media has permanently changed investor behavior in many ways. Professional investors have yet to come to terms with. So true, right? The fact that we're able to get on Twitter, form these groups, right, and almost work as a team, which seems to be taking place in the equity markets. Almost work as a team to try to squeeze stocks that have high short interest, pump stocks that are, by all means, I would say, in terms of fundamentals, they don't really have much fundamental value right now. If you're valuing stocks on the basis of fundamentals, the things that are pumping, they don't really make a lot of sense. Okay, but it is a completely different environment right now, and there are different regimes and periods within markets where certain things work. They work for a while, and this seems to be one of them where it's the meme stocks are all correlated. It doesn't make sense to try to fade them. For the person who's looking for a generational short, it's just the risk reward isn't there in some of these names that pump. That's my opinion. Like they're all vertical charts, right? They all look ridiculous, and really what it says, it speaks to the how do we put it, animal spirits, right? The mob mentality in markets. So this is something that's just, I think it's good for BTC, honestly. Hopefully that makes sense. I think it's good for BTC and for crypto because there is a lot of money that is being made in things like this, right? In these meme stocks. And that money comes from a certain type of participant, right? The behavior of the traders and investors that is taking place in traditional markets, I feel like there's a lot of parallels and cross-pollination to be had between the crypto market and the meme stocks. And honestly, it's funny because this is nothing to us, right? 100% pump in a stock, it's like everyone loses their mind. 100% pump, that's nothing, right? We see that every other day. It's like a random ticker, and random altcoins up like 200 points, 200%. So that money's going to find itself, I think, at a better poker table soon. Okay, so let me just go through the chat. Just wanted to take a look at AMC real quick. I hadn't really looked at the chart recently. I've just been sort of hearing about it in the background. But again, I guess I'm not really looking at the chart because it's not that impressive. It's like we got better things to focus on that are a little bit more predictable, I think. A little bit more formulaic, the crypto market. The equity markets right now, the meme stocks, kind of like the Wild West. Okay. All right. Donald, what's up? Dig Dug, what's going on? Okay. Keld, what's up, buddy? John, Corholio, Andrew, what's up? Lee, Goran, Jay, Charles. Yeah, volume, absolutely insane. All right, cool. What's up, Mr. K? What's up, Will? So yeah, we're gonna take a look at BTC. We're gonna take a look at ETH, and then hopefully we'll take some questions, and yeah, and hopefully you guys will leave better off than when you arrived. Okay, so just to go over really quickly, because I think I've kind of mastered the art of OBS, and what it is I'm not going to have too many screens on at a time. I have, for the sake of the stream, actually, we'd have multiple tabs. So I'll put on multiple tabs so that we can have sort of multiple things that we're looking at. A little redundant, multiple. So let's go to BTC. All right, move this down, make sure you guys still see that. So this is our 96-64 trend reversal chart, and let's put on a TPO chart. So you're looking at the top left-hand corner of your screen. This is a TPO chart for BTC. I want to go on Bybit. Remember, I trade on almost every exchange, put it that way. I won't get into specifics. You know, I said I trade on Bybit, trade on Phemex. I do a lot of my BTC trading on Phemex. When it comes to spot, I do a lot, and just picking up spot, right? Getting in the sidelines. I do a lot of my contract trading for BTC on Bybit. Just slight differences in liquidity for BTC and ETH. I do my DeFi trading, the DeFi pairs that are available on Phemex, the contract and the spot. And I also traded on all the other exchanges that you could think of. I don't want to get into too many specifics, but the main exchanges, I've always been spread out across all of them. So real quick, one sec. It's got BTC. Let's put on ETH. We'll go over that short that I was talking about I missed while I was at the gym. And I don't mean to be vague, guys, when I say, you know, I trade on all the exchanges rather than getting into specifics. There are just obviously certain limitations when it comes to being a United States citizen. Nothing legally wise, but I think you guys get it. Right? I don't want to dox myself too hard. On the bottom right-hand corner of the screen, on the bottom left-hand corner of your screen, you can see Phemex right here. This is Sushi, and then I do have my Bybit set up. All right. So on Bybit, again, I'm going to be trading BTC, and we'll be trading ETH. And right now, I am still, like I said, in cash. So we are going to go to the USDT perpetuals. Okay. So that is set up there. All right. Okay, you love the streams. I'm happy that you love the streams. That's awesome. Okay, so we'll have the TPO chart over here. All right, remember my drawing tools only work in the center screen, unfortunately, because of the way that I have these windows set up. We'll have the chart over here. Okay, again, drawing tool won't work there, so we'll have to use the native drawing tool. I'm just getting all this stuff set up. Bear with me. All right, I'm going to change the color of that so that pops if I need to point something out. All right, go back. It's not going to stay that color, is it? All right, we'll have to delete that. Okay, and this chart, so I want to go over this really quickly. So I normally look at a footprint chart, right? This just shows me, again, the way I describe it is it's a bit more atomized in terms of the breakdown that we're seeing. So right here, for example, we're looking at BTC. We're looking at the aggressive buys on the right, the aggressive sells on the left. Not all of this was new business, meaning, you know, the sells on the left, not necessarily all of them to open up shorts. Okay, some of them might be to close out longs. Same thing can be said for the right. Not all of them necessarily are longs opening up aggressively as much as some of them might be shorts being stopped out. And I say that because you don't have a complete increase in open interest. All right, so whenever I use the term new business, if we're looking at, say, for example, a swing failure setting up, I want to see new business open up through that level, right? If I have, you know, for example, let's just focus on this low right here. If I'm saying, you know, this is a good area to pay attention to a swing failure, you know, not necessarily that it is, but this is a good low to look for a hunt through. On the break of that low down here, what I would want to see is, you know, a ton of aggressive selling. So let's just go back to a candle and let's reference, let's imagine that I just want to find a low that maybe looks, okay, here's a good one. So this would be the kind of setup, right? Let's say that low is right here. Okay, break that low, sort of a puke point in the market. You know, I'm drawing on that other chart and you guys are not seeing it. I'm sorry about that. So this low, sort of a puke point in the market right here would be, let's put the drawing tool on, the line tool. Right here would kind of be that line, right, the low. So upon puking through that low, you get a lot of participation, right? Ideally, this participation that, 1.2 million contracts, 438,000 contracts, 1.2, 1.1, et cetera, et cetera. Ideally, that participation is new business. Now, when I say new business, I mean that that's not longs closing out, that's not necessarily just stops being ran, but those are, breakout shorts opening up. And I say that because what happens is when you're trading, let's say that all that is down here, which it is. Okay. Well, no, excuse me, it isn't. This is a scenario that I'm kind of drawing that looks similar. Let's say that all of that participation occurred here. If you're someone who shorted, let's say, thinking that this was a breakdown, as soon as price is trading back above your level, you're thinking a couple different things. You're thinking, oh fuck, this is gonna, either I'm wrong about this, or I need to get out of this, or maybe I'll hold on to this for a little bit and see if it comes back. But either way, you're suddenly underwater. So whenever that's a new position, that can lead to, this is a move that's actually, it's commonly referred to from in old price action traders called it as a double pressure, meaning you're not just getting buyers stepping in, you're getting buyers stepping in from, you're getting buying power coming into the market from those shorts being squeezed, right? So these, if it was new business, meaning leading to an open interest increase, right? If those were shorts opening up and not necessarily longs just closing out, those shorts opening up when price ticked back above that level, that would lead to them having to buy to get out of their position. So the best swing failure setups are when, you take out a level, you get a ton of participation through the level, and you get an increase in open interest. So all right, it's not just a stop run, right? It's not just a stop run, which someone is buying this, right? Because there is a passive order over here that's absorbing this, but it actually is, we do have that extra sort of fuel in the market, right? So that extra fuel in the form of those shorts that opened up because, again, they sort of thought that this was a break point. So this is the footprint that I'll commonly use, but it is also good to use something like this, right? This is a footprint essentially, but what I'm really doing is, rather than looking at, say, how it's broken down, I'm really just looking at where there are big spikes in volume. And I could see, because this is colored by delta, what levels where an abundance of sellers over buyers, or the inverse, right? So for example, this is showing me that at this level between 2788, 2787, there was volume was 902,000, right? It's not showing me how much of this was aggressive buyers or sellers, but it is red, so I'm seeing that there were more aggressive sellers at this level. This is something that's good to use also if you're just kind of like just getting into this and you're trying to figure out what you're comfortable doing, what your sort of setup is. By no means is this the only way to look at a footprint, right? Again, I've used volume cluster, I've used this. Sometimes, honestly, I change it around depending on just getting tired of looking at the same screen, because I am getting sort of the same information. Does that make sense, guys? So new business is most important for a swing failure, right? If you think about what a swing failure is, right? Let's say, this is our major swing within market structure. We've moved sideways for a period of time, and then the market approaches this from a distance, which is important. This level looks like one of the more obvious important levels on the chart. Where this would be called sort of a high participation zone, right? Major contextual level. Everyone is saying sort of, okay, this has been a defining feature within market structure. If we break it, then, right, then things are going to drastically change. Well, a lot of the times you'll see that that's a trap. If you're coming at it from a distance, from the first test, you get a move through that level. You get a ton of breakout longs that are triggered. You'll get shorts that are squeezed that have their stops above here. Okay, but now if a ton of that volume comes in, let's say that that's your footprint, and it looks something like, we'll go find a heavy buy volume footprint, meaning rather not heavy buy volume, but just, come on, how did I drag that fucking bid ask all the way over here? Oh, that's a pain in the ass. Wouldn't be a stream. There we go. An imbalanced footprint above that high. Imagine that this high, if it looked like this, we'd be like, okay, that looks like a great setup. Ton of buying above that high, breakout buying, open interest increase, positive delta, all those signs that through that level, there was a lot of commitment. Now, a lot of the times my low time frame trading, what it really just involves is, one, trying to be the other side that pushes against them, and two, taking advantage of the imbalance that occurs after that. That volume, let's say it's right here, All right, and I'm talking about this. Follow the cursor, that top candle right here. All right, that buying that came through there. As soon as we start ticking below that, you know, those buyers are beginning to feel the pressure. They're beginning to feel the heat. And a lot of times what I'll try to do is counterpunch as hard as I can, you know, to try to throw as much in the opposite direction and lean on that position and sort of create what happens after that, which is a long squeeze, right, if that occurs at the high. But again, just as a reminder, it doesn't matter how you're looking at this chart. We could break it down many different ways. You know, this is by delta, so it's showing us at each level if there were more buyers or sellers. You know, you could have the bid ask if you want and still color it by delta. No matter how you cut it, I mean, this kind of chart, regardless of your setting, is going to be very useful. Okay, because you can see, again, most importantly, what you're able to see is that volume occurred in the areas where it looks like there was not much activity to begin with. I mean, if you look at a chart like this, and this is your wick, a lot of times you're going to think that there wasn't much that occurred up there, when actually, I mean, look at this candle right here, that most of the volume was actually in the wick, right? But you might get the idea by looking at a candle that has a big wick and think, well, the wick is, you know, less substantial than the rest of the candle. All right, let me just get this back to the way I had it for ETH. Okay, so I just want to go over some. Does that make sense, guys? How can you color by delta on XO chart? Is this here? No, this is XO chart. So this is XO. I have the cluster under delta cluster and the text under volume. I mean, the text is set up to be volume, and the clusters is delta cluster. And I just have a high sensitivity. All right, so that it's only picking up on really the stuff that stands out, not the low volume. So let's go over that ETH setup earlier. So real quick, actually, let's just go over the high time frame. All right, so high time frame for BTC, just my sort of my approach right now. I said that the most important levels on this chart for me was this prior weekly range. Okay, prior weekly range that we were stuck within for 5 weeks, gained acceptance back within there. This is that weekly level right here. So this line, okay, that was that weekly level. All right, now we have 3 days left in the weekly candle, so simply the candle being over that right now is not substantial enough. A high time frame close through that might. So a daily close through that level might be. But as you can see, I have another level on the chart as well that I think is probably more important than the weekly level. And that's because it is a more defining feature within local market structure, and that is this daily swing high. You know, if we're saying that we're making a series of lower lows and lower highs, well, then this is one of the more important contextual areas within this chart, right? Because I'm saying that it is one of the defining features of what I'm defining as still sort of a downtrend that's taking place. Even within local market structure, it is a range, right? But we still have a pattern of lower lows and lower highs. So simply put, price has not been able to swing above and close above this level. We haven't returned to there yet. I think that that is the most important level on the chart. That this weekly and daily level is, though, an area where I would look for development earlier, right? So you could sort of see we're right in the middle of that area right now. And this, to me, this kind of price action does not look substantial enough in terms of strength for me to get long early, right? So I'd rather honestly just wait, simply put, for a daily close through these levels. A significant daily close, even better, even if it means they're kind of late. And then some type of pullback, right? Some type of consolidation. And then I would ultimately say, all right, I'm willing to get long, and I'm probably going to start looking between 45 and around 50. And I say start looking because honestly, it would be up to my interpretation at that moment. I'm not going to say I'm going to hard take profits at 45. You know, this is a market that is still kind of, there is a level of uncertainty in the market right now. There are things that I am unwilling to overlook, and one of them is how throughout the entirety of the last 3 days, almost nonstop, there has been a spot lead over derivatives. So derivatives actually include Binance Perp. So here are futures, and this is spot. Okay, so these are trading over these. So, that is how you get negative funding, right? Okay. But it is the spot market that we were looking to put in the bottom period. And the fact that this has had a consistent lead over the last 3 days, and it's only come off slightly for a little bit at a time. I mean, just a few minutes, honestly, before it has recovered immediately. And it hasn't been the case that really at the highs, most importantly, that it stepped off. So the only other time that I remember this being consistent, where spot was trading at a consistent premium over futures, was when Elon Musk and Michael Saylor were getting into the market, right? When Elon Musk was TWAPing into the market, when we had the bigger entrants coming into the market and they were just buying with a TWAP. So that is something that I'm unwilling to overlook. But still, I think that we're close enough to that level, to my total, range and bearish invalidation level, that I'm willing to just wait for that. It doesn't make sense for me. We're so close that I'm going to have patience at this point. I'm not going to say, all right, I'm going to buy this in anticipation of this breaking, because I haven't seen what kind of response we get at these highs yet, right? I haven't seen if we're going to do something where we break above and then maybe we end up correcting slightly longer and end up ranging longer. I think that's there's a high probability of that occurring anyway. So on the high time frame, I'm still flat for a reason. Okay. Yeah, it is a nice structure so far on the low time frames. I mean, you are making this sort of rounded bottom. Some people might look at this and say that this is, an inverse head and shoulders. But to me, it's still a range. Okay. I mean, you could say that there are a few other levels that we're coming into that are very significant for the bearish thesis. One of them, obviously, even if this is bearish, regardless of the fact, even if we throw back, Bitcoin can continue to break down, right? If anything, one thing that we've said, I've been pretty consistent with over time is, hey guys, like if you're late, don't sell the bottom. If you're into a, from the high to the low, a sell-off that's over 50%, you're going to mean revert, right? The month of May, this month, was the worst month on record. Okay. So we'll go to this fancy dancy website. Data. Bitcoin returns by month. You'll see that this month was the worst month on record. So what do you think happens with assets in general, right? They have a period of red months, and especially if it's a very red month, right? Especially if it's BTC, right? Because we've seen the type of behavior that it exhibits. You have a month that is the worst month on record. Like, what do you think? Personally, I expect a bounce after that regardless, even if it was to continue down either way. All right, so a lot of the times you're going to get a bounce to at least the 50 point, and this could still, continue to break down. And I wouldn't bat an eye, because after this type of sell-off, like I said, when you're 25% into a sell-off, I mean, the odds are in your favor, honestly, right? To probably hold a little bit longer at that point. A lot of the times you're going to get that relief rally. Okay, it might come a week, a couple weeks later, but more often than not, when you sell after 25, 30%, especially, this is 50% at the lows. It's like, who else is left to sell down there? There's no macro catalyst. There's no, if it's not continuing anymore and the momentum is slowed, then what are the odds? The odds are in favor of a bounce over time, right? Because this is a move that will likely be filled to some degree, regardless of the direction the market assumes from here. You just see this no matter what. You see this mean reverting behavior across all markets. Absent of some type of major catalyst that is a macro catalyst that causes all markets to panic and sell off, where you have some type of liquidity event and there's contagion, let's say, across traditional markets similar to March and April 2020. So no matter what, I expect a bounce. Okay, we are close enough to my high time frame levels to where I'm going to hold out still, but my invalidation is right here. Okay, and then like I said, playing a bounce to anywhere within this realm. and really observing price action in this area to see if it looks suspect, or if we just start grinding up here, right? Let's say we pop up, we start grinding, then I'm going to be less prone to assuming that this is going to continue to correct. But no matter what, price to me is still stuck within a range currently. ETH I think looks better. I mean, ETH against BTC looks strong. ETH USD, when you look at the weekly chart, yes, ugly. You should be using log charts with the higher time frame charts, guys. These are logarithmically growing assets. ETH did not break down past its, it did not lose weekly market structure. It didn't really have much substantial market structure on the way up for the 6 weeks prior to the breakdown or the beginning of the breakdown. But either way, no matter how you cut it, it didn't lose the last area of consolidation, which would be, the first area we would look to act as support. So ETH did have a bounce there, okay? If you just go back in ETH's history, there's been plenty of large sell-offs, and similar to BTC, it wouldn't surprise us. It shouldn't surprise us if it does recover, and ETH is exhibiting strength against BTC. The one thing to focus on is that during times of weakness, all correlations go to 1. Like, regardless of what your thesis is with BTC, regardless of what your thesis is with ETH and BTC being diverging or decoupling, whatever you want to say, when Bitcoin crashes, that shit is out the window. And if you want a good example of that, here's a good chart. Correlation should be like a 0.8. Okay, so BTC ETH correlation is, I hit that one like right on the head. Where is that? I don't know exactly where it is. Did I get it right on the head? Is it 0.8? It's 0.8016. Correlation is very high. Okay. So this chart does not lie, right? So regardless of what your narrative is and what the future holds, right now is all we have. Okay. You can't take investments with just the idea of right now. Obviously, investments are forward thinking, but still, this is not a market where I want to get too far away, too extended until there is a sign of strength across all the assets, especially the one that kind of leads the rest of the market. So that being said, what I mean is I want to see that BTC has found its footing, has found its floor, has put in some type of sign of strength and higher time frame market structure, meaning taken back a level, and then we could talk, right? Another thing to focus on before we get down to lower time frames, just to give you the higher time frame picture that I'm looking at, the 20 period moving average, right? This is the 20 period on the weekly. This is the 20 period on the daily. We're below both of them. It's a significant level on the way up, right? Dynamic support, meaning it's moving. It's not static. It's not one place in time. It's a lagging derivative of price. Arithmetic mean, when you return back to it in a strong bullish trend, you can see it act as support. Now, this is the first time we've significantly lost market structure and the 20 period, so this should act as resistance if the market is going to remain bearish. So there is, I don't have an opinion on bullish, whether it's bullish or bearish right now. I like the fact that we're between that area and the 20, between the 20 and local market structure, there's a ton of confluence. So what that to me means is that if we're above these, I have a really good validation, right? Meaning invalidation for any kind of bearish thesis or short-term bearish thesis. This would ultimately be bullish to me. You're above the 20 period moving average on the daily again. If this was going to be bearish, it should continue to reject. If it's going to be bearish, it should continue to make lower highs. So this would spell short-term bullish behavior to me and lead me to really, what this would do would lead me to prioritize all things long. All things long until we start getting to this area that should be a pretty sticky area. And it's an area, guys. It's not a specific point. So I can't sit here and say, like some people will tell you it's a specific line and that's it. Your round number is probably going to do the job initially. So what that means is the first area that I would expect as resistance, 43,000, 45,000. These are just areas where I would look to. 43,000, 45,000, this weekly low, right? So 45.97 is also that daily low. So if we just put this on anchor, so the lowest close part of this structure, it's also the lowest weekly up here. So 45,239, excuse me. Same level. So you could bet that that should act as significant resistance on the way up too. But again, if we develop over time, it's a different story than if we just come straight up. Right? If we just come straight up, I would be more prone to thinking that this would get rejected than if we just if we do this over the next couple months, then I'm thinking that this is clearly just going to break up. Does this all make sense, guys? Then we'll go over the low time frame charts. See if we could mark out some levels and take some trades. So dynamic resistance with the 20-period moving average, static resistance, horizontal resistance at the daily and weekly level. We're above the significant weekly level that I said is a line in the sand, but we have 3 days left in the weekly candle, so we can't just go off of where the weekly candle is now. It's been bullish price action on the low time frames, though. We do have it's not sustained anymore. Bybit is in the lead now. Okay. But we did have a significant spot lead. There's a strong spot presence finally again. If you look at funding right now, should have a few negative funding rates. BIMX, Bybit, OKX, USDT margined. So that's a really good sign. Okay. Just go through the chat real quick, and then we'll go over the I'm gonna go over the setup that I was talking about missing earlier with ETH, just to show you what I was looking for. Give you an idea of how I look for setups. Okay. So let's take a look at the ETH chart. So we're on the ETH 1-minute chart. Okay, let's put on the profile. So volume profile, session volume. It's right here. You could see it, right? All right, so what we're looking at earlier, this was the short I was looking for. Break above this high that would ultimately lead to failure. So what we had was a strong trending day that fell within balance, right? Fell within balance and fell into sort of more rotational mean reverting behavior. Okay, so strong trend, collapse back within the trend, take out all these lows. All right, so this is the beginning of the day right here. Take out all the lows and fall into more range-bound behavior. All right, so this is the value area based on the volume profile. Okay. If I'm looking for an imbalanced setup, it's not really going to be, unless it's on the very low time frames and it's very specific, and I'm just probably looking at a footprint chart, honestly, and maybe really local market structure. If I'm looking for a really imbalanced setup, the best case scenario is when it's at an extreme, right? So the value area low and the value area high. Now, it's not just enough that it's a value area low and value area high, because you're going to have one of those in each profile. What's really attractive is when it's a ledge. So we'll go to ETH. So earlier this morning, and it's still there, before this profile developed a little bit further, this is the TPO, right? So you're seeing the TPO on the left, and you see the volume profile, how it corresponds. They're very similar, okay? The TPO, we'll line that area up on the chart by putting on a, there we go, let me just change the color of that. So you see the ledge? I have the drawing, I have the line on the ledge. So this is an area where the market came up to a few times, right? Was able to spend time against, and there was no clear rejection. Now, it's not at the end of the profile though, so you wouldn't expect maybe a clear rejection the same way we're talking about when we talk about tails. So this is actually a decent high. It's not the best looking high. It's not a very, even distribution from point to the fat, from the tail to the sort of thick of things. This is a poor low at the bottom, so we'll move this up. That's a poor low. So that's showing that the market was able to spend a little bit of time there. It opened up within a prior profile, so it's not as big of a deal as if it was in the middle of nowhere, because what would you kind of expect it to reject? It was within a previous profile. But this area, when it's a ledge, it's sort of a structural anomaly, right? What it was is, if you look at the TV chart, since it's right here, whenever you compress the candlesticks, you get the TPO, right? It's just compressing all the data, and it's showing you where the market spent the bulk of time, right? The most amount of time. So you can see that it spent a good amount of time at this level, right? Multiple times at this level, multiple rejections at that level over time. All right, so this is an area that you would, when you're looking at your TPO chart, what you're really just trying to do is, one, get context. Are we balanced? Are we trending? Are we in a rotational sort of range bound environment? Are we, bracketed? Are we in high conviction mode where one side clearly has the lead? In this structure so far, so from left to right, you have a strong trending day, you have a balanced day, you have another strong trending move, you have another semi-trending, more balanced move. Now, over time, throughout the course of the last 4 days, what you did, though, is you had value migration. So balance, value migration, so the blue area, meaning where 70% of the activity was taking place, kept going up, right? Point of control going up, so most of the volume being determined higher, or rather most of the volume being transacted higher, most of the participation being taken up. So it's a good sign, right? It's a strong sign for bulls. But when you have this kind of anomaly on the lower time frames, really, what we're looking at when we're looking at the profile is, okay, where are some areas that I could look to in the future to see what kind of interaction or what kind of business is being done? You might have a thesis before then. So my thesis was that this was going to be a nice stop run opportunity, right? Especially if we approached it from a distance and we didn't kind of grind up to it, which is more or less what we had, right? We had this consolidation at the low, you had this V right here, and the market is returning back to that level. It's not grinding up there. Bulk of this move was pretty vertical, right? And this is a 3-minute time frame. So if we go down to the 1-minute time frame, you can see that this was kind of straight up most of the way there before this little brief consolidation. So this is an area, that I've identified, right? I said, okay, this is a ledge. And like I said, this was more pronounced before this profile had developed more, right? So it kind of stood out as more ledge when it's looking something like that, right? This is, an even distribution. So if we're going to draw two distributions, this is your sort of Gaussian distribution, nice and even. And this would be a ledge, right? A kind of a chunk, very odd looking portion of the structure. It could be multiple places. You have a few of them within this profile. If I was going to say, hey, raise your hand, tell me which areas on the chart were ledges, I'm pretty sure that most people could point them out. Where the cursor is right here, that's a ledge, that's a ledge. So when the value area is established and there are these ledges like that, and it's not something like this, I'm much more actually prone to fading where the value area high and value area low is, right? They're an area where I would look to see that kind of level of rejection again, right? Until it changes, nothing changes, right? Nothing changes until something changes. So this is a high that, as you can see, I had marked off on the chart. So it's actually not there anymore, but we'll mark it off again. So the high was 28.50, so 28.50. So we'll go back up to 28.50, mark that out. So what I was looking for at this level was a flush of volume, right? One, we were approaching it from a distance. Okay, so that criteria had been established. We're not grinding up to it. Okay, and then two, I want to see that through the level we have a high amount of participation. All right, so we'll zoom out. We're looking at the ETH 1-minute chart. So here is the return back to that level. Okay, again, you can have this set to a footprint if you want. All right, we'll put it on, we'll just do a bid ask, and then we'll do the bid ask profile. Okay, it's the setup that we were talking about earlier, right? The bulk of the activity, and again, that's not even the high. That was my level for the ledge. The high that I was focused on the 1-minute chart was 28.44. Right, so where we're going to start looking for this behavior to happen. Right, so it's actually right down here. So I had two levels marked down the chart. I think it's still in the image I shared on Twitter. So this is an area that I defined in advance so that I could look for a certain type of activity when we return there. Now, if we had, let's say that upon returning to this level, not only buying, right, but we had a ton of selling and the market was able to hold, that's a different story. All right, so you actually did have a decent amount of selling right here. Okay, but immediately after, you could see that price kind of flushed that low on low volume. So where that volume showed up previously, really nothing showed up again after. Okay, so we'll put it back to the delta cluster and then just volume. So this is high participation through a swing high. The only thing that I'm really looking for after this, and this is very nuanced, obviously this is something that you develop with screen time. You could help this by looking at the tape long enough. Looking at the tape is really just looking at a non-recorded version of the footprint, right? But if you're seeing that you have a ton of speed and then price slows at this level after establishing this kind of volume and there's no new volume that's coming in, a lot of the times what I'm going to do is just my trigger is nothing sophisticated. It's not like, I have 10 steps that I take before taking this trade. If the bulk of the activity came in right here, the moment we start trading below that, my stop is above that high and my trade is on. I'm immediately marketing in. And I'm marketing in for, a lot of the times what is equal or greater size than the trap that I'm seeing, or at least a portion of it, to try to create that sort of counter, that imbalanced effect in the opposite direction. If you are focused on this swing high within market structure, and a lot of people are, if I'm going to ask you what areas that you should focus on to look for swing failure patterns in these type of setups, well, if you're up to this point, what are the areas that stand out within market structure? So we're up to this point. Okay, this stands out, and this stands out, right? The areas within, not so important, okay? The areas where price most obviously turned are the most important, okay? Because these are the areas where a lot of people are going to be looking to define what has been a local trend, right? So, trader A is looking at this and he's saying it's bearish because this was a rejection and we're going to continue down, right? This is a defining feature of market structure. So trader B comes along and he says, okay, so if this is bearish, then clearly this is bullish. So when you have these levels within market structure where a lot of eyes are on them, and it's on the low time frames, it's on the high time frames, and when it's on the high time frames, it's clearly much more important because you have a lot more participants in the market at those levels. They become areas where these traps set up, and these imbalances are very easily taken advantage of. Does this all make sense? So let's mark out some significant levels on the chart right now, just locally, that will be focused on should any opportunity arise. So even though this area has now been tested multiple times, you can see it is on my chart still. So it began at 28, what did I say, 44 or 42, and that goes up to 28.50. Even though that area has already been hit, I'm not going to presume that it's going to break. I'm not going to say, oh, multiple taps mean it's going to break. No, on the low time frames for me, I just want to have an area to look, right? Upon returning to that level, if I see that when we get there, the buying that's coming in is staying and the selling that's coming in isn't doing anything to price, then I probably won't take the same trade again, right? But if upon returning to that level, we have the same type of imbalance setup, I'm going to take the trade. Like, I'm not going to sit and think, it's a 1 minute chart trade. I'm not going to think like, oh, well, what happens if this trades below and then comes back up? That's not for me to determine. Like, I'm taking hundreds of trades based on this. I can have 25 that don't work out. And as long as it's not 25 in a row, I'm willing to continue to just bat at this level. So that level, again, is significant to me. All right. This is an area where we just rotated from. Okay. If we were to continue to move up to this level and return down to this low, it's an area that I am still looking to. Because again, I said again like fucking 50 times, excuse me. Not that low, excuse me. The ledge, say 20, this is we're looking at BTC, excuse me. So the ledge is 27.80. It is right there. So 27.80. Okay, again. Make these lines, color that pops out if it helps. And this is me just mapping my chart just so that is nothing special about it. I'm just getting an idea of where we sit, where my levels are. Now, sometimes I'll label them. If I have too many levels on a chart, sometimes I'll label them so that I know, okay, so why do I think that level is important? I might label it specifically so I know how relevant it is, right? Are we coming back to the higher time frame level for the first time? Or are we coming back to a low time frame level for the sixth time? But ultimately, if we continue to move up from here, tap this level, and we rotate down, I would play the same flush at this level again and again and again. Right? It's not for me to determine what time it's going to break. I'm just looking to see in the moment the type of behavior that takes place at that level. Right? And again, you could get the same thing with the volume profile. You could get more or less the same thing. So if you extend this value area where there's kind of a ledge in the volume also. You can see it's more or less in the same spot, right? But this whole center point, not a center point, but where the bulk of the activity took place, the value area, in this kind of distribution, you see how it's kind of depressed in the center? Well, it's because price didn't spend much time in the center, right? Access was kind of revoked at the extremes very quickly, and price rotated back to the other side without much friction or anything really stepping in the way. So I'm not really looking for any trades in the middle. All right, I'm not really looking for any trades in the middle. It's kind of an area, like I said in other streams, it's an area where it's pretty ripe with liquidity, so it's easy to get in position. You know, you're looking at this, let's say price is right here, and you're thinking, oh my God, it's back in the gap. It's going all the way back here. The reason why I'm not looking for a trade like that, unless it really stands out and I see something that is compelling and reason enough to take it in the center, is it's not a good area for me to find risk. Like if we're up here, what am I saying is the invalidation for this trade thesis? You know, if I think the trade is coming here, can it come down here first and then go up there? Right? Can it take multiple paths throughout this structure before it gets there and the trade still be right, but it's not a good area for me to really define a position to tack on as much as I really am looking for. Whereas at the extremes, you know, this low now and this high, it's kind of like, all right, if I'm going to be shorting this high, I know that if the whole thesis is around this high being the major area of rejection, then, you know, kind of what are we doing above it now? Like, why have we found footing? Clearly that idea is like, it's expired. Same thing at the low. You know, if I'm buying this low again and we're trading below this low down here, well, what is my idea? What's my idea behind this trade? Now we're treating this as resistance. The whole thesis behind this was that price would leave this area quickly like it had prior. All right. Now you do have some single prints. So you could see that from 2760, so right down in this gap, you do have some single prints. I don't know if I'd necessarily really be looking for these single prints at this point to play them. Specifically, again, it's at, we'll just make this tick setting a little bit more granular. So it's 2760. If you look at a half-hour chart, you can see it on the candle because it's where price had not come into any previous candle's range. So you're looking right from that candle high moving forward. So we'll go ahead and mark that out because who am I to determine whether or not a level is important before we arrive there? So we do have that single print level marked out right now. So this is an area where, you know, price had been rejected pretty closely. And yes, single prints imply, you know, if we return back to the single print area because it was an imbalance on the way up, we should see, technically speaking, we should see a response down there again. Meaning, let's say price rolls over. What you're doing is really just trying to have an idea of what level might give you some level of kickback when you don't have anything else to go off of, right? So single prints, more often than not, you'll see that price does respond outside of them. And if anything, you know, it's just more liquidity down here now that we have a very clear area. So when the market has been able to hug against a location for a long period of time, and it's an obvious area, it does become an area that is clearly ripe with liquidity and more often than not will get ran. Other levels that always mark on your chart if you're intraday trading, the daily levels, the previous daily levels. So, you know, this day's open, yesterday's high, yesterday's low. More often than not, you're going to see those on my chart. And you will see that when we lose those, so when we lose a prior day's high, you know, you're falling back within a prior day's range. So we're looking at, you know, price right now trading back below yesterday's high. If you lose this, more often than not, you know, you might lose it on the first couple of tests, but if you continue to spend time in yesterday's range, it's a clear sign of lack of strength, right? You know, when we're talking about price ranging to begin with, we look for things like overlap, right? So a sign of a trend is when you have value shifting up and the point of control shifting up, right? Ideally, your point of control, one sec. What screen is my drawing tool on? I cannot find my drawing tool. Okay, too much screen space. Okay, whatever. Ideally, when you have the point of control moving up, you know, price continues to trade above the point of control. You know, point of control where most of the volume came in, if you're thinking about the type of activity from both sides, as long as you continue to trade where the bulk of the activity came in, right? Bulls are control, okay? You start trading, it's the same concept that we talk about, well, the same concept that we're kind of alluding to when we look at the footprint, which is, hey, if all this volume's coming in and it's, a ton of buyers are coming in, don't we want to keep that level? Think about how you would feel if you were that buyer. Now, apply that to a ton of traders. And that's the reason why you have big structures that roll over when traders get long on derivatives, because they have more path dependence to their positions and they have a tighter pain point. So we have our levels with ETH. So we'll just leave this. I think right now we're more or less in a spot where I don't think I would look for any trades, right? I think if we might. So we'll just mark this out because we'll observe the behavior if we start getting above there. All right, so just because maybe we'll have a quick long opportunity from 28.10 up to 28.23. Not to say that I'm prioritizing that, but just in case that happens during the stream. So 28.10. And we'll look to see what kind of behavior comes in if the market breaks above there. And ideally what you would have is, if this has been for the last half hour, if this has been a significant pivot point, you could see the two highs right there, right? If that is significant and you have those longs trapped up there, you could see that delta. If that is significant, then why should we be able to gain acceptance above it? And if you do gain acceptance above it, anyone who's short it will probably cover. All right, so what I would want to see is if we traded above that level, upon trading, let's zoom in real quick. Upon trading above that level, if I was looking at the footprint, it might stand out a little bit more. But I think that this tool might be a little bit more help for you guys to understand if you're looking at it in total. This would actually be the kind of footprint candle I would want to see at that retest. So let's say, this is the break above the high. One sec. Fuck me with the drawing tool. Let's say we break above the high. The first sells that I see come in, I want them to be similar to this. I want to see that this level gets sold. And most importantly, even if it's both sides, volume. And when I draw a candle, when I draw this, I'm implying volume below where the current price is. So we're trading here. Most of the volume just came in at that level. If you're holding that volume, then that level is doing its job, right? If I break it down by the bid ask, I could see, oh, okay, there's a lot more passive selling. There was a lot more aggressive selling, a lot more passive buying there. Derivatives didn't necessarily buy this level as hard. Okay, I actually like that. But the level is being sold. So just the concept of sold and hold. Sold and hold. So especially when you have a lot of selling come in. This is not, the color might not be the best for this stream. But especially when you have a lot of selling come in, if the selling comes in, and it's sort of what's happening on the high time frame, selling is coming in, but price is not moving lower, well, it's telling you what side of the market maybe you should prioritize. Maybe if you continue to see selling come in, but prices continue to trade higher, well, selling should move the market down, right? So if selling's not moving the market down, then that's just a very simple concept of where is the market trying to go, and is it doing a good job of getting there? Well, you have negative delta, market continuing to tick up. Well, it's doing a bad job of getting there for a reason. So the website link is www.blockroots.com. You have to type in www. Unfortunately. So no, we're not looking for any longs currently right here. Again, the area where I said I would look for the next opportunities would be down here at this ledge. So around 27.80. So we're looking at ETH right now, and maybe above 28.10. So if we break above 28.10 now, especially after having a pattern like this occurring, if we're going to hold this structure and break above 28.10, we might have an opportunity to play back to this next sticky area. And this would be a very quick trade to take, and I'm going to make sure that I immediately set up for 100 ETH either way. So I will mark it into positions immediately. So I will always have, so if I'm unfortunate, so I normally use Quant Tower. but some of the APIs are not working properly, so I have to use the exchanges, which are phenomenal, but I like to use the professional trading suite. It's a lot easier to be fast on that. But here's how I will scalp. I will a lot of the times mark it in and try to limit out. A lot of the times the opportunities I'm looking for don't permit me to use a limit order. Once I see the opportunity, the idea of using a limit order kind of nullifies the trade, right? The idea of getting a fill at that point after the market is off sides just it's unlikely. The volumes come in, market's ticking against, it's unlikely that it's going to, tick back in the opposite direction. So, and one of the more important parts of the trade is actually hitting the market in the opposite direction. So I will have it set up so I can immediately mark it in, and then I'll have my limit set up as well. So what I'll do is, and you could do this if you want, so let's say that we're prioritizing that long. So we'll mark it in for 1 ETH. So in this case, we're just talking about maybe prioritizing for the long. We'll mark it in for 1 ETH. So now we're in for 1 ETH. We can go ahead and add and this could be 1 BTC. It doesn't have to be anything. 1 contract, that's like nothing, right? And now what we can do is actually set our take profit and our stop immediately. So let's say I'm looking for this trade to set up, and I get something like this, and I mark it in. My stop, once I mark it in, it's going to change the values of the stop loss and the take profit. All right, so I can go ahead and have this set up before the trade is even on. And it's not going to do anything right now while it's set up. Like, I'm not losing money off of 1 ETH, being long 1 ETH contract, right? So if I get this set up, I mark it in, say the conditions are ripe, I mark it in, my stop loss, I can immediately drag up, and my take profit is already on, just in case, I get in the setup. If you're not prepared, and this is why using a ladder is very useful, if you're not prepared, you can mark it into a trade, and the trade can be over by the time your exit is ready, right? If you don't have a limit ready, sometimes, these squeezes, what they do is, you might get the setup right here, and immediately it's done that. How many times have you seen that happen? Where you get a setup, it's like, oh, should I act on it? And then boom. By the time you even have a chance to act, that split second of hesitation, in the time being, what transpired was the squeeze, and the trade's over. It comes up here, it's cleared value again. It's in the thick of things where it's not a good area to find position. If it pulls back here, well, fuck, I definitely don't want to get in position. I was looking for this setup and I just missed it because I wasn't prepared. Or let's say that I got long here, and price is doing a decent job of actually chugging along. Well, in this case, I might just get to mark it out, right? I might get to mark it out. If I see that there is a substantial amount on the bid, the bid seems stacked, I'll just sell into the bid. It depends. It all depends on the specific trade. There are a lot of different categories in which I could say beforehand, when I would be marketing in, marketing out, when I would be, marketing in, limiting out, and rarely when I would be limiting in and limiting out, right? Or limiting in and marketing out. A lot of times, if I'm limiting into a position, so getting in with a passive order, it's an area that I've really defined well in advance as being a high probability bounce area. Major swing failure pattern on the higher time frame, first visit back to a daily level, first visit back to a weekly level, where I know, okay, it might have a little bit of excursion against me, but I'm going to scale into position in this area, and I know it's kind of a set and forget. And the more I pay attention to it, the more likely I am to pull myself out of it before the bulk of the trade actually is before I'm rewarded. Okay, so let's look at the chat real quick. All right, so we have the levels for ETH. For BTC, yesterday's high, we're sitting above yesterday's high. I mean, there's not really, let's put the profile on. We'll take a look at BTC's profile. Below today's point of control, kind of chopping around it. Today's point of control would be the area where it would be the ripest with liquidity. So the easiest area to get flat-footed. This is not somewhere where I want to get in position. If I was going to say, hey, where I would get in position for BTC, I mean, honestly, at this point, maybe a swipe of these lows again, not the most attractive area. I mean, you have a tap into yesterday's high possibly, but maybe above this cluster right here up to, again, this daily swing high, just for little scalp opportunities. Either way, no matter what, in the center right here, this is Crab City. You can see what the market's doing. Chop, 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 pop, chop, 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 break down, chop, chop, chop. You're constantly getting people flat-footed and in the center, right? It's easy to get flat-footed and under the impression that something's going to lead to continuation, and then the market just reverses on them. Just market maker heaven right now. Again, though, with BTC, you have value migration, right? Value migration, and if we're able to break above this daily swing high, which we've already tapped into, if we're able to break above this and find our footing, then, you know, above 40K, I think logically implies, at least initially, a move to 43, right? 43, next sticky area, got this little spot right here, right? Coincides with structure, low, first retest, round number, big round number, big obvious round number. So 43, 45, and I'll say 45 before that weekly level and daily at 45, 239, because I think it's better in these conditions to anticipate getting front ran in a bearish manner than it is to anticipate follow through in a bullish manner. So does this all make sense, guys? So see, this is actually a good, this little pivot right here, more recently, this one, that was a nice little swing failure. I mean, it wasn't a swing failure based on breaking any low, right? But it was a little trap on the low time frames. So it's not something that I would honestly take, but I think for the sake of example, this is exactly what you would want to see at a low if you were looking for stops to get ran and for some type of swing failure to play out. So you have an increase in open interest and you have a lot of volume trapped below this low, right? So a ton of participation. Here's a candle body, previous candle body, still within range, within the range of the previous candle body. So market moves sideways, attempt down, okay, dumps, and then price reverses on those positions. And, you know, it's a very small move, but setups like that on the higher time frame, on the lower time frame, through significant levels, this wasn't through a significant level, are very, very rewarding. Okay, so let's take a look at the market real quick. So we still have a significant spot lead again showing up. So one thing that I'm not certain about is the spot lead, is it due to everybody having been sidelined, now getting back into spot, and the fact that everyone got wiped out on derivatives and there's just less firepower on derivatives right now? Or is it a spot lead because someone is, you know, T-wopping in? Solana's just looking strong. Solana is on, this is on Phemex right now. And these lines I have on the chart are, I hate the grid lines. Pet peeve. They are the daily session lines, just so I have an idea of sort of how each day has transpired. So the place where I'm at right now with a lot of alts is treating yesterday's high as resistance, but not really something that interested in taking advantage of. See. Yeah, let's see if you get the move above. We'll just have this ready just in case we need to pull the trigger. Ooh, what did I do? I changed the tick setting. I didn't mean to do that. I don't know why I did that. Okay. What was I saying? So Solana. Just want to keep an eye on that. All of these alt pairs right now are obviously heavily correlated with ETH, right? So ETH, BTC showing signs of strength, more money coming back into DeFi. But after this, again, this was a near 70% sell-off from high to low with Solana. So from the high, right? I say that because you're going to get a bounce in 99 universes out of 100, 999 trillion, billion, whatever. You're going to get a bounce no matter what. So the most important thing at this point, and I know it's super hard to not be like, well, why aren't you really optimistic? I mean, this bounce is awesome. It's because the bounce is almost guaranteed. Like if you didn't get the bounce, I would be questioning what world we lived in. I mean, this whole, the whole range low. One sec. This whole range low. Get back to this tool. Daily lows, right? Was obviously an extremely important level for market structure on the way up before this break. Right? You're stuck within a range. That's the range low. So logically, this should be the area, the next area of major resistance. So again, you know, we're looking at defining a trade. Higher low, maybe. All right, so you're looking for a change in structure. So you're looking for a higher high now. But this area, this level right there, that was probably one of your more important levels in that reclaiming that did set up this trade. All right, but now it just happens to be that we're so much closer to resistance than we are to any support, right? So where do you know, so this is like whenever I say that from a contextual standpoint, the risk reward is more attractive for a short, even that, you know, I might say, you know, not bearish, but contextually, this is a good area to short. That's usually when you're at a all-time high or, you know, not all-time high, but, you know, what has been a higher time frame daily or weekly high, you know, market structure defining area that has rejected price. You know, the closer you are to that, the more easy it is to define a short. Because, like, just think about it from, you know, in this manner. This area is the area that you would expect to be the most significant resistance. Well, this is a good area to short because, one, the next target would be down here. And two, most importantly, the invalidation level for this is right above 44, right? Meaning if we're above this level, then clearly the thesis for a short is wrong. And you want to be able to place your wrong area, right? Your wrong area, your stop, as close as possible to your entry. But it doesn't mean you just, ooh, what's going on with ETH? It doesn't mean you just do the, oh, fucking shit. Not paying attention. It doesn't mean you just do that. Doesn't mean you just take a short because of that. See this? So I probably would have longed that, honestly. But that would have obviously been a poor decision. I mean, I don't know if I would have looked at it in the second. I mean, actually, there's not really any selling that came in and even held. So we'll see. I mean, unless this ticks now above. So what you would want to see is something like this right at the level. So the fact that it's kind of one-sided at the level, and it's not like we had a ton of buyers. I mean, it's not like we had a ton of selling at the level initially. Selling came in slightly higher. I mean, they would be back on side now if it was above 28.12, but it looks like that was just a stop run. And a lot of the times, if you run the stops, you're going to see the market reverse. And I say it looks like a stop run because a good amount of that open interest was had decreased. So this kind of response immediately, if the market just had come above here and chilled out for a second, and I was paying attention, I probably would have longed that. Could have longed that a second ago, honestly. Now that it's after the fact, I don't want to lie to myself. But after that kind of rejection, I'm not going to look to long that. Just because you had a stop run, it looks like a little bit of this was a stop run. Put the bid ask on so you can see this again. So you see up here, 282,000 contracts to 1.1. Up here, more importantly. So you see the 0? That means the price never went bid. So once it ticked above 2815.5. The bid didn't follow at all. Instead, you just had someone jump the spread for 1.9 thousand, 1900 contracts. So best case scenario for a kind of setup would be if when breaking above the level, we had that selling come in right at that level that I was looking at. Again, before marking this level out, I had said that this is not that significant of a level to begin with. But if we were going to put on a trade during the stream, this would be one area to look. Just not the kind of response you're looking for right away. You want to see the selling come in above the level. So if anything, now you're just getting some buyers step in. So yeah. Maybe a pullback now, but still top ticking. No volume there, no volume at the bid. It just looks like buyers are going to try to get aggressive in this, but I think it squeezes back either way. Blue is too dark. Shit. Sorry about that. Little squeeze. Watch it squeeze all the way up to the target, and then the point of that whole placing your limit beforehand gets made either way. Yeah, this is just a little short squeeze. See how open interest is dropping? Open interest is dropping. Buyers are coming in. Those buyers are from shorts being squeezed out of position. Not all of them, obviously, but a fair amount of them. Let's take a look at BTC. What's BTC doing? Really nothing while Bitcoin is still stuck in its little market maker range. Now, because of this, though, because it looks like we're having this little exhaustive pump, would a short opportunity set up from this? Again, I think most importantly for me is we are kind of within the center of this range. So this happens to be a little low volume area within that. So I could see, flushing above this high and then rejecting. But where it currently sits right now, I wouldn't want to anticipate that. See how you had the selling come in and the market's actually holding up? So I wouldn't want to just anticipate that occurring. So maybe we actually get a visit up to these highs, and we'll see about taking a shot there. Let's get short one contract just so we could set up real quick. See if we can get a flush. No, they don't necessarily get liquidated. They're just getting stopped out. Meh. Came up to this low here and just turned around so far. Right at this low, right? Just sloshing around the range. But I wouldn't want to be selling this right now. Why is this line crooked? Hold on one sec. Put a better line there. So see how this selling just came in? 310,000 contracts, and now price is able to hold that level though. So if you just sold that, right? You're thinking, ah, fuck. That sucks. I'm getting squeezed now probably. So let's see, maybe we come up further and take out some of these highs. But if we flush into the structure and we see immediately that buyers come in and we tick under, I'm gonna mark it short. Let's see. Come on, flush. It'd be nice if it actually squeezed a bunch of shorts and we flushed up and then top ticked. But I'm not going to take that early. In these kind of conditions, a lot of the times you'll see that there's a lot of stop runs on the lower time frames, right? So what you'll have is the market will move in one direction, stop out one side, reverse, move back in the other. So honestly, it's not the most important thing that it's new business, because a lot of times, even on some of these swings, they are equally as potent when you see that in the swing. Let's say, for example, price is moving up. In the swing, there's a big drop off in open interest, right? After price takes out a significant level. This is not really a significant level where I would say, oh, this is a great squeeze area, right? To run some stops. You're more likely going to get those at significant highs and lows. So, and like I said, remember I said about placing a one contract trade just to get set up. As you can see, this is not, I don't know if you can see it. Right now I'm short, I'm long, no, I'm short, but it's only one contract. So it's $7 in profit. Like if this ticked against me and went all the way up here, it's not going to cost me any money really. It's going to cost me a couple bucks just to have this set up though. And you have this set up because ideally you're approaching a level where you're going to be looking for a certain setup and you're somewhat biased. Doesn't mean things can't change at that level, but let me change the color of this. Maybe that would help. So this pops a little bit better. There we go. And now the blue. It should be a little bit better. Turn off the gradient, maybe that'll help. There we go. This setting is, hold on, let me move this down. You can see my settings. See them now? Let me just send this back. So those are my settings up there. So this setting is, and I just wanted to share this setting right here to give you guys, it might be something that's helpful. My personal settings, more often than not, you're going to see that for BTC, I'm using a trend reversal chart. It's either a 96-64, a 320-190, and I go back and forth between those settings between. So it depends on what the rotation sizes are and sort of what the speed of the market is for that day or for the whatever that current environment is. And this is a bid-ask profile. Text is bid-ask, and the candle is the open and the close. And then the ETH one is, I'm just going to be using the 1 minute chart. I'm not using any one of ETH's trend reversal settings. I haven't been scalping ETH long enough because I was scalping BTC forever to really have a feel for those settings. And I think the 1 minute chart honestly is sufficient. The 1 minute chart on BTC is sufficient too. I've gone over why you use a trend reversal chart or a non-time based chart. It's just to clean up some of the noise. But when the market is moving, when it's moving, there's not a lot of noise, right? There's not a lot of candles that are being printed, and it's not noise actually. It's just there's not a lot of candles being printed for no reason, right? For just the passage of time alone. Quick short. There we go. Come on, hit my TP. Moving back up against me. All right. So I close that position out at about 30 cents below where I opened it. So that's how quickly I'm going to get in and out of positions, by the way. When my trade doesn't set up the way I want it to immediately, I'm going to get out of the position. And this is not the most attractive setup, period. So I'm glad I got out because now it's squeezing a little bit harder. But just to give you a heads up, a lot of the times when I get out of a trade, I might get back into it a couple seconds later. Take out that high maybe. Ooh. Tagged on again. Squeezing against me though. Let's move above that high. Take profit down here. Come on, give me that squeeze. See this 1 million, 1.9 million? I want price to fall back below there if I was going to add on to this. In profit, 230, 265. Come on. See, this is ugly when it's gonna squeeze against me again. I'm gonna leave this on. Get stopped out or not? But above that high, so above 2482, 42, excuse me. So we'll see what happens here. See, that's a good sign. So 303,000 contracts up at the high. Ideally, price just rolls over here, though. I don't want this to squeeze up any further. More buying coming in. This is where I would normally be looking at the tape also, but unfortunately during the stream. Oh, come on. Yeah, bottom. Keep ticking lower. Okay. So my take profit right now is just back at 28.25. So just back at the last structure. So just above. So you're looking at right here. And this is going to probably continue to try to squeeze. There's a little fight going on back and forth. See, that's bad. 1.1 million contracts right there below. See, that's the kind of stuff that sets up for a further move up. So I'll let this play out, though. See if I get stopped out. The risk reward is there, though. So it's not a big deal. Low volume coming in back towards that high. And this is, ideally, this is just an exhaustion play, but, you know, right now we're getting a little bit more of a squeeze than I guess I anticipated. It'd be great if the market just top ticked right here, thinning out a little bit. Some sellers coming in. I'm still in a decent position. A little bit early maybe, but it's going to squeeze up. Fuck. Whatever. Look through the chat. I'm pretty sure TPO is a paid feature. Got stopped out of that. Watch the market's going to reverse now. Should have just played that same level as before. 28.44. Let's see. What are your thoughts on Matic? That thing is flatlining. I'm not paying attention to alts at all right now. Is the corn getting short squeezed? Let's see. I mean, right now, so far, it's derivative led. So, God, do I want to just re-enter this trade? I mean, we're kind of back at right back at that level. My stop should have been higher. My entry should have been higher. I'm tempted, but right now we're having the selling that's coming in is doing a decent job. So, for example, you know, right now the candle is this is the low, but you know we're sitting on top of those more recent sellers. One contract to start meant 1 ETH, so yeah, I just tagged that on just to have the position set up. Yeah, let's see. Maybe we'll take out that high again, and I'll just end up, because of this being a vertical move, I'm just going to end up reloading. Oh, you fuck. That would have been the ideal entry right there. Just for a quick drop. and I was too busy setting up the position. This is why it's so much easier to trade on the ladder. And I'm not going to chase it now. So you see this setup right here. It's just one contract. I'm not really in a. It's in a short, but it's nothing. It's just to set the trade up so I could have my TP and my stop loss set up. But now the trade is already in that brief amount of time. I mean, ideally, I'm not going to be entering now because that 2844 level that I had marked out from earlier, that ledge, this is where we are currently. That's a little bit higher, so that's 28.5. So maybe we end up having, this would be, for me, if we did something like this, then I would try to short top tick this one. But I'll leave this setup on right now. I'm not going to chase this though. So you have volume coming in, but price is still holding. So see what I'm talking about? The volume is at the lows and price is still able to trade higher. So it's just not a good looking situation when one of my bases for entry is that someone is getting screwed, you know? So now that if the market pushes up slightly, they get out of position and then the market squeezes up much more. And a lot of times you're going to squeeze it a couple times before that is, you know, they are exhausted. The trade I was trying to take earlier was, you know, this being vertical and looking like it was exhausting a little bit sooner, but it is what it is. You have a lot of wrong trades, you have a lot of right trades. You know, and just on those 2 trades alone, you know, if you're trading decent size, you know, you lose $2,000. So just on a couple bucks moving. So a vertical move, how much do you take a vertical move versus a couple candles under a high low into account when looking for T's fail break? I think that's one of the most important things. So if you have a vertical move that covers a decent distance, then that's usually something that's really good to fade. But now if you go down to different time frames, for example, we're coming up with ETH into significant resistance. I think that this is more likely to break above now because of the way that this on the high time frames has come up, right? That's not influencing my lower time frame trades though, my 1 minute chart trades. This, for example, is not something I think is going to be a good idea to fade. I think that this is probably going to break up. I just have such my invalidation is so close, it doesn't make sense for me to, I'm not going to get in early. Like I don't care if I'm slightly late. Same thing with BTC. You know, Bitcoin is kind of grinding its way up here. I think that this kind of behavior more often than not leads to a break up. Whereas, you know, the first bounce back to a level from the low is most likely to get rejected. Low time frames, it's much different, obviously, for scale reasons. But it's not, right? It's the same concept, but has different amount of people behind it. Same concepts, excuse me. Shit. Should have taken that. If I should have just placed a trade and then placed my take profit on after. This is the trouble with trading on the exchange after you've been trading on the ladder for a long time. The benefit of the ladder is that I would break this order up into multiple limits to exit, and I would already be exiting some of it immediately, or at least trying to scale some of it out. Even if my take profit is all the way down here, I might pull some off. If my initial entry is up here, I might start placing some limits as soon as we start dropping, just to give a little bit of a cushion. So, damn, this trade's probably going to work out, and that's trading. But honestly, you know, what this looks like it's going to do is going to set up for, you know, you might get a little bit more move. You know, I'll leave this open. But I'm just going to move these out of the way so it doesn't hit either, honestly. Get these. I meant to move that one down. this is probably going to give us something that is reminiscent of this 3-drive structure, right? Something like that. And then if we have that, and then we do have, you know, another big puke by buyers above that high, then I'll just take that trade again. I mean, now you are taking the risk because it is a higher low, right? From here to here, equal highs, third time around, but this is such a small move that I'm looking to take advantage of, that this kind of play above this high that ends up taking those stops and then breaking down here, it almost doesn't even matter, right? Because this can continue to move up and still be bullish, but I'm looking for that initial trap setup regardless of what the, you know, if the trap setup presents itself, I don't really care what the trade does past that 1%, 2% move. So we'll see. Does this all make sense, guys? Does anyone have any questions or anything? Just check my phone real quick. Back to having a spot lead too. This is so, I don't know, suspicious. Now this is in aggregations of 50. But you can see there's a decent amount of bid support. I mean, if we break this down to tens, which is kind of wide still, the bid is refreshing and you do have a spot lead. Spot lead on Binance, between Binance Perps and Binance Spot. Bitfinex is the lead overall. It's odd. It is odd. Hugo, to see block trades for free. Do you normally go places and ask for things for free? What kind of question is that? No, if something has a paywall and people pay for it, then you're certainly not going to get it for free by asking. I guess kudos to you for taking a risk and asking, though. So BTC's profile it's finishing off as a balanced profile. This is kind of ugly down here. So the one thing that I would be mindful of is how this structure. So let me show you what I was talking about. In the profile, this whole area right here, move this up. This area right here is, it's not clean, right? Shitty distribution. Market opened up down here, balanced out above. But the trouble that I have is, I know the drawing tools are not on that screen, so let me just back out real quick and go to, we'll use this. Make the chart naked. The trouble I have is if you're looking at this and this is your profiles, one profile, trending profile, nice, right? Area of balance down here, but a low, a low, a low, and uninterrupted lows all the way down. So the problem with this, and the thing to be mindful of, is that these lows, what they do is they get crowded with stops. Right? You got long here, your stop is down here. Okay. Price moves up here, you drag your stop up here. Okay. We move up here, you drag your stop up here. All these trailing stops that right now have been uninterrupted, and all these just structural stops, right? So the trouble with that is there are times when you will have this structure that has been kind of grinding its way up. Might be this sort of ascending wedge. That's what they might call it. I don't know. That was a horrible drawing of it either way. It'll get to a main point, right? Which is, say, we're coming to a point. This is tightening up over time. You'll get a pop through, and then this rejection can roll and lead to a cascade because all of these lows with stops end up cascading into each other, right? So take out this low, these lows trigger, selling more longs, these lows trigger, selling more longs, and then this move occurs really quickly. So I don't like when lows are left untouched, which is why we like structures that are 3 drive that leave the scene immediately. You know, you might have a low, a low, and then bang, a low, and then price is now trading back above a significant area of structure, right? It's so far from the scene of the crime that to imply that it would need to clean that low up would be to imply that the market has to revisit every single high and low, right? Whereas this is, it's a matter of just caution because they are so close and the market has rewarded longs locally without much interruption. Yeah. And this is so this low, as I think Dem is referencing, is a poor low. Okay, but as I said, this low opened up within another profile. So it's not like it had to reject anywhere, right? It's not like it was in anything new. But it's still, it's an area that we'd look to because the market was able to kind of just chill there without much of a response. And that low is right here. So it's the most obvious low for a stop run, right? So the trouble is, as I was saying, when you have many of those and they sit above each other, it just becomes like dominoes, right? Yeah. Going into the weekend with a bunch of untested lows sounds horrible. This is kind of a choppy looking flag. Yeah. I was gonna say, if you have a structure like this and you're flagging, we do something like this, then it usually sets up for a nice little play to the next sticky area again. So what would be nice is if now you just put in a 3 drive structure to the low. So this little micro flag, and upon doing that, trapped a good amount of activity below that more recent low. So this is where this chart is handy. So you see that? You see how that just happened? You see when popping through that low, that volume just puked through? So it was like bang, 270,000 contracts, 400. Oh, wait a second. Oh, is this going to set up for a long? If it trades above, nah, it's getting slippery. So that short would have worked out. It looks more obvious by the second that short would have worked out. But this could, this is why scalping the low time frames, it doesn't, you don't, having a bias is kind of silly because the market is going to be offering opportunities in both directions constantly. So you see the amount of volume that just came through now. Not a lot of volume period per candle, right? You know, an ETH standout 1 minute candle is above a million. Clearly, it's not the same as BTC. But that little swing low right there, so taking out that low, once that happened, you saw the puke, right? So immediately someone puked their position. So now if we're going to trade back above that structure and have that intact, you know, what are you likely going to see? You're probably going to see something that moves back up and tests out this high. So, which always, you know, it could give you the impression that there's always a trade to be taken, but clearly you don't want to get too chopped up in this kind of environment. How would you play such a move if the high fails and starts taking out lows, or what is important? Well, if the high fails, it becomes a higher time frame. If this high fails, so let's say, for example, so we have our daily level, we have our weekly level. So both of these very significant. You know, weekly is closing in 3 days. Daily is closing. You know, this daily is still underneath this previous daily level. If we were to get a run of these highs, all right, and had a significant close back through this level, I might be tempted to short that right away. Um, with not just on the 1 minute chart, but clearly saying, all right, so this is a daily swing high, pretty important contextual level. If we have a move through here that fails, and we're going into the weekend, and price is kind of, it's clearly one-sided activity above that's been lost, then I'd be tempted to short this because, again, it's in a really nice area to find risk, right? So my thesis is, hey, if we break above this daily level and hold it, then I'm bullish. So if we break above here and have an immediate rejection, then it makes sense for me to honestly consider a short because my invalidation is so close. So I'd probably be looking at a swing trade or a more positional trade back to at least the mid of the range or these lows. Okay, which is something I'd be a little bit more patient about. So ETH is have a nice little spill. And that was the trap up there. And I got in $9 too early. Should have waited to my previous level. And this is why you leave your levels on the chart. I didn't leave this on the TradingView, but these were the levels I shared on TradingView on Twitter earlier in that picture, and this is the same levels that I had in the beginning of the stream, and was not mindful of them and tried to take the exhaustion play a little bit too early, and because the screen was more or less like this, neglected to see that I had those levels right there. And there's your big ass trap. But that is the game. Now, it might be a long opportunity right here, but for a quick play back up to these highs, I mean, you still have BTC in the lead considerably. Where's my, oh, I'm like, where's my drawings? Okay. I mean, are we treating previous structure as support? Are we going to? Are we continuing to move up to this, the daily level? We're above yesterday's high still. Got a decent amount of volume into that low, but some of it is old business closing out. I mean, you're probably going to see the squeeze in the opposite direction again, but it's not clear to me. I might just place a stop below here and then target these highs. For the sake of the stream, let's do it. See if we can get a 1-to-1 trade here. Excuse me, these highs. Oh, I had it on it. So 28.38. So hopefully everyone doesn't have the same idea as me, because we don't want to get stopped out twice in a row. All right, let's see. Probably going to wrap the stream up soon. We'll see if this plays out. See if this little sell, if we explore this low again and have a little bit more selling and then could pull back up, that'd be nice looking. Again, this is not in the best area to take a position. We are, sitting above the point of control, but my point is this kind of scalp, this is just a very low time frame scalp. I'm not taking anything remotely close to any extreme. So, but BTC right now looks like it might be trapping. You're getting a good amount of volume with BTC into this low. So whether or not we have a squeeze coming up, because again, it's an obvious breakdown and then the market's going to pop up, we'll see. So we're long another 100 ETH. And, we could just, I don't care getting stopped out multiple times. If I get stopped out, if I have like 6 or 7 losing trades in a row, I know that something's probably, a little bit off. But feel like that stop might be a little too close anyway. I want to give myself one tick below that high. So 421. And this should be at the highs. I'm just looking at the same. We're on ETH USDT, so that's why we're charting Bybit. So the target is up here. So entry. I never do this. I never use this fucking thing. Oh, wait a second. So just a quick scalp. Yeah. So let's see. Doesn't look too good, but just want to bang some shots during the stream. Best case would be starting a stream and having and approaching one of those significant levels and being able to take some trades there. You're getting some nice volume come in here. It's just not in the best area to find. It's not the best area to find risk. Even I know that. But we shall see. Does anyone have any questions? See, this is good though. So see this selling for ETH. If you could see this, increase in open interest, okay, negative delta, good amount of selling coming in. Spot lead. Let's see if ETH can give us a pop up. It's not the best looking structure. It's just one rip up and then drifting back down. So I wouldn't say to normally long something like this. But again, my invalidation is close. I mean, we're just a couple basis points away. 10 basis points away with a stop. Right? Oh, it's on. Excuse me. I'm looking at the wrong. This is Binance. Excuse me, not Binance. Perp. I mean, I wouldn't call it. I mean, I've been intraday trading now for as long as I can remember. I've been trading though for 14 years now. So. But I've done, you know, I've been a trend follower in certain markets with style that's more like a CTA. I've intraday traded things like oil, E-mini S&P, BTC. Most of my trading is the intraday. So I call them momentum scalps during the day, momentum swings even. But yeah, I've done it all. I've done this style of trading though forever. So I don't know. Forever means, you know, I'm trying to think of when I first learned profile and footprint. It clearly wasn't the first year I started trading, but it was soon thereafter. I'm fucking old. Typical risk on a scalp. Depends. I'm taking less risk now because the environment's not that friendly. But I mean, this ETH scalp is 100 ETH, right? So 283,000 bucks. Percent risk. It's all a matter of what my. I mean, this is in consideration with what my portfolio is, but this is a smaller risk than I would normally take. And in conditions on the way up, I was taking a lot more risk, but it was still within, I guess, normal risk limits. But I just have a pretty substantial portfolio now. So even a position like this, even though it's a lot, it's not actually that much. That's why I could, you know, scalping this and scaled down is even better because if I take multiple losses, it's obviously not that painful. But I mean, if you were to say what my typical risk is, I would assume that it's under 100 basis points because in terms of the stop distance, because my invalidations on these scalps are going to be really close. And a lot of the times the scalps are not attractive from a risk reward standpoint for the really tight scalps. It's like a 1-to-1 trade, or it's a 1-to-1 or a 2-to-1 or 1.5-to-1. Unless it's between a pretty wide area, trade's going to be right really quickly or wrong really quickly. Old, you look 30. Yeah, close. Close. Ooh, more volume below that low, and stopped out. And stopped out. But yeah, and I guess I'm not that old. So. Yeah, that was obviously not the strongest idea. BTC taking a little bit of a dump too. Yeah. So as just a lesson, you know, don't be like me and take trades just for the stream. But just to give you, I guess, an idea of how fast most of the time I'll be making decisions. The point from the beginning of the stream still stands. You know, you don't want to take trades in the middle of the range. You want to take trades at the extreme, at areas where there would be an imbalance period. You know, if I'm trading for myself, if I'm trading throughout the day, most of the time I'll just set these levels and walk away until we're even close. So I'll have alerts that are set that are within close proximity, just so I don't have to focus too much on the chart if we're not really close to anything local. This morning I was, you know, I happened to wake up and there were some good opportunities to set up immediately. So that was there was no reason to set sort of a, you know, any kind of alerts. So the most, I guess, you know, we'll finish up the stream, but the most important levels that I guess I would focus on are still the same ones from earlier. This 2780 level for ETH, where that shelf is, again, back at this high, you know, at 28, around 28.55. So keep in mind where we are on the high time frame. We're at resistance. This kind of approach is more of a grind than anything else, but the problem is you have a bunch of uninterrupted lows, right? So that's with ETH. Same thing with BTC. So within these daily profiles, multiple lows that, again, that's not the low up there. Daily lows, and on the way up, look, just every higher low you're making has been kind of uninterrupted. Besides these lows, which were taken out, you just have a series of 1, 2, 3. If you're going to say like, oh, where are some of the more obvious swing points on the chart right now? 1, 2, maybe 3, 4. I mean, that's not much, but I'm just pointing out that that's kind of where a pivot occurred. 1, 2, 3, 4, 5, 6. So 6 uninterrupted lows, 6 areas where you could expect a good amount of stop activity, right? This little drawing is a bunch of stops. And if you fall back within one, it's very easy to run all of the others. That's why after structures that build up kind of slowly and steadily, like this, when they pop up, a lot of times you will get a flush, right? And then they bounce and recovery. But the flush is not because people wanted to sell, but because they were forced sellers. Do I use any indicators? Alerts wise set horizontal. Yeah, I mean, I've gone over it many times. I look at VWAP. So I look at the VWAP, which is the volume weighted average price, to get an idea of where most of the risk was put on. That's this line right here. So we'll put the VWAP on BTC too. So I'll look at anchored VWAPs from specific breakpoints where a significant change occurred to see where most of the risk was put on after that. I'll look at a higher time frame VWAP, a weekly VWAP, a quarterly VWAP. These are not going to all be on my chart at any time. Most of the time I have a given idea of where we sit, and I only will pull them on if we're getting close to them. I have referenced many times the 20-period moving average. Moving averages are very useful. Okay, kind of a line in the sand, your Bollinger Band, center line, areas that things that other traders are going to be looking to as well. So what are we getting the squeeze now after we dumped all the way down? Makes sense. You retrace 60% of the move or most of the move, and then you fucking moon it back in the opposite direction. So, and this is the kind of environment we're in, right? Because this kind of price action makes you think, well, this was going up, so if we're all the way down here and we just engulf this entire candle, well, then it has to be bearish. And then what the market does is it pulls all the way down, right? Then rips all the way up, and then constantly, it's just this constant pattern of ripping up, engulfing, you know, rip up, slow breakdown, right? Rip down, slow grind up. Okay, so that's why it is very much respecting major pivot points. So now that we just had that, this might seem a little redundant because it's like, oh, it's every high is important. Well, yeah. If now, let's say we continue to move sideways and we take out this low, this high is the next high again I'm going to be looking at. And until we break out of there, then I'll continue to take those trades. Because you could see, you know, if my invalidation is above here, when my stop gets hit, I'm just like, whatever. My stop is hit. I'm looking for the next trade immediately. Or I've rather, it's not that I'm looking for the next trade immediately. I've already kind of forgotten about the last trade. If it had the appropriate conditions, then that's all I could do and not really get attached to outcome, but more about the process. It's process over outcome. Now, the problem is, as I'm saying that, we're talking about a trade that I just got stopped out for the last one that was longing in the middle of nowhere, and I didn't mention taking that trade at all before we took that. I said you could either maybe long this for a target of over here, or maybe short these highs, but I took the short a little bit too early, and I took the long when I never would have taken the long period. So it's do as I say, not as I do. Yes. So this morning, let's go back to, where was this morning's trade? This morning I started longing right here. Let me look at the first trade. Oh, it's doing the thing where it's skipping. It's 5. Can't get right between it. Oh, I could just move this up. There we go. Where's the scroll bar? No, it's still not giving me a scroll bar. You see, I could pull the trades up, but I can't stop it at a specific point. Okay, so it was either this low, I'm trying to think of my first long of the day, or this low. I'm pretty sure it was this low. It was definitely this low because there was much more of a move. There was a move below, so it was just a swing failure pattern. So this is where I got things started today. So the first trade of the day that I took, which was this is at like 9:50 a.m. I had kind of a late start to the computer this morning, was right here. All right, so this was a pretty simple trade. Again, same concept we've been going over. This was the first return back down to the value area low. So market had been trending up, broke down completely. You're putting in a significant low. So you put in the significant low right here. So it becomes one of the most important local levels on lower time frames for me. Putting in a high, so you have what begins as maybe a range. And then what I did was just play the trap setup below here. So we could probably go all the way back to that on the 1 minute chart without causing too much trouble, I think. Yeah, it's right here. So you see how clean this one is. You're looking at all of that activity below the low. Let's put this on volume. And that is your swing failure right there. So upon breaking that low, so that low specifically is 27.69, which is right here. So breaks the low, get a puke through. Once we start trading back above that low, I'm getting long. Now, mind you, this is on the BTC and ETH inverse, right? Which I think is more important to pay attention to because it has more volume and open interest. So it's the traps on here that are going to still inform any kind of trading decision I make on USDT margin. I know it sounds kind of funny if you're new to trading, but if you've been trading BTC for a long time, you know that you chart the leading exchange, you go by the leading exchange's order flow and so forth. So I'm looking at traps on Bybit, and I'm looking at traps on ETH period. I could be taking them on behalf of Binance if the leading exchange was Binance. I could be taking them on behalf of that footprint and be taking them on the on the Bybit or the Phemex chart, or whatever chart you're using to trade. So, all right, guys, I think that's going to wrap it up, though. We are 2 hours into this. Wow, it was a long stream. But yeah, we'll go live again over the weekend. Probably. My wife is we were supposed to go on vacation. We're going on vacation now a little bit later. So we're going on vacation in the middle of June. But we were supposed to go, and my wife she's going to do a bridal shower for a friend or something like that. I don't remember. So we just happen to be able to move our vacation a little bit, and it's not that big of a deal because it's close anyway. Just going to be staying at a nice little house on the beach. It's not little, actually. It's really nice. And all of our family members, because of that, are deciding to pass through, which is a pain in the ass. So yeah. Cool. That'll be it, guys. Everyone have a fantastic evening. Until next time, stay smart, stay safe, trade well.